So why do we look at the calendar? To find high probability trading events. One event we're looking at this week, and it's a good example of how we need to see everything aligning together to give us a clear opportunity, was with the RBA interest rate meeting. Now, the Reserve Bank of Australia in a situation where inflation's still too high, but they're starting to see a potential peak in inflation. And the question is, when will the RBA turn and start signalling clear interest rate cuts coming? And that's what we were looking for. Now, on the cheat sheet for the 10th of December meeting, you can see early 3:30 UK time. What we were looking for here was a rate hold but dovish rhetoric to give us a potential Aussie dollar sell bias. Now, the RBA did drop the line that they're not ruling anything in or out. That just shows a slight movement towards interest rate cuts. They did focus on their recent softer than expected third quarter GDP data, came in 0.8% on the quarter versus 1.1% expected for Q3. That was seen as not a justification for loosening monetary policy, but certainly a concern. And there was a shift in tone from the RBA. However, what they didn't suggest confidence in the trim mean inflation moving sustainably downward. Instead, they noted the concern about the core, the trimmed mean, underlying inflation was still too high. So even though we had some aspects of the dovish rhetoric that we're needing, we didn't have the key aspect, which was confidence in the trim mean. That's the RBA's preferred, focus on inflation, and with them actually saying that the underlying, that's the core, the trimmed, whatever you want to call it, is that underlying inflation pressure, they said in the interest rate statement, was still too high. So you can just see the reaction here in the Aussie New Zealand dollar, and we looked at this as we came through in the morning after the interest rate decision. You saw the Aussie dollar weaken on some of the dovish aspects of it, but then it just gently found a recovery all day. And we mentioned in the webinar for the London session that this was not an opportunity worth chasing because of the fact that the underlying inflation was still seen as too high. So that's why we look at the calendar. We're looking for key events, and that's why we use the cheat sheet, so we can spot those events when they do occur, and importantly, so we can also spot them when they don't occur. So that's just something that was worth pointing out from this week's cheat sheet earlier on the Tuesday, the 10th of December. Now, as we look at the coming week, there's three events that are jumping out. The first event is the UK CPI print on Wednesday at 7 a.m. UK time. Now, inflation data remains key for the Bank of England, and the latest CPI print that came in October was 2.3% year on year, and that was above expectations, and the core was at 3.3%. Now, the Bank of England has stressed that the services inflation figure at 5% is incompatible with a 2% target. So what we're going to be looking for on the CPI print on Wednesday is any clear indication that the inflation battle is being won. Once that is given the green light, that inflation is being won in the UK decisively, then markets can move on to the next question as to how quickly the Bank of England will be cutting interest rates. So it should be a pound negative move should inflation data on Wednesday come in below markets' minimum expectations. It's certainly one to watch. The other key event of the week, of course, is the Federal Reserve interest rate meeting. And the Fed are in a situation where they're expecting the path to 2% in inflation to be bumpy. But what markets want to know is, what's that pace of rate cuts going to be looking like? And at the last summary of economic projections for September, we are due another summary of economic projections in December. They expected interest rates to end 2024 at 4.4%, down from the prior forecast of 5.1%. So they saw it slightly better, which is the way the markets moved. And for 2025, they projected rates to be at 3.4%. Now, that was down from the prior estimate of 4.1%. Now, STIR markets have it at 3.75% currently for December 2025. So it's going to be the pace of rates that's going to really grab the market's attention. And we'll have some projections and what to look for up on the cheat sheet nearer the time. But it's all going to be about how quickly do the Fed see the path of interest rates coming down? How far do they see that neutral rate going? And is there any sort of fresh drivers? We know what the expectations are roughly, but markets will be looking for some kind of deviation from that to give us a clear move in the dollar and or equity markets. See the cheat sheet and what we're looking for nearer the time, but what we're looking for is a surprise move lower or higher to give us a clear consensus dollar move. But we will have the base case up nearer the time, so we know exactly what to look for on the cheat sheet. Now, the Bank of England interest rate meeting is going to be on December the 19th, on the Thursday, the day after the UK CPI print. Now, on December the 4th, Bank of England's Governor Bailey said that the Bank of England should have 4 rate cuts for 2025. Short-term interest rate markets see 3 rates. So Bailey was pricing a slightly more dovish path, but those comments have been played down after Bailey made them as a more sort of technical move. However, the last growth projection from the Bank of England saw growth revised lower for 2024 but slightly higher for 2025, and inflation was revised lower for 2024 to 2.25%, but then higher again up for 2025 at 2.75%. So quite a mixed picture here from the Bank of England. What we're looking for here is inflation and growth metrics all revised in one direction, and then we're looking for some clear signalling about the pace of Bank of England rate cuts. Now, we know the services inflation data is key. We haven't got that now. That's going to be due in January. So whether the Bank of England is going to be able to have enough information to make a clear decision remains to be seen. Nevertheless, if they do indicate a clear direction, particularly we're looking for the door to be opened for sequential interest rate cuts, that will be the key, then that could allow us to see some pound selling. As I said, a few fiddly central bank communications for the coming week. So do check out the cheat sheet nearer the time, and we'll zone in exactly what to look for in terms of central bank communications. But they're the main 3 events to look for this week.